Hey, good evening. I am Rachel Marks. I am Vice President of Shalom Task Force and associated with the law firm of Schoenfeld and Goldring. Joining me this evening is Erin Bistrisser. She's a senior staff attorney at Sarah's Voice. Sarah's Voice is the legal branch of Shalom Task Force. Welcome, Erin.
Thank you, Rachel. Nice to see you again.
Thank you. You as well. Tonight we're going to be continuing our Financial Abuse 101 webinar. Last Monday night we met for part 1, and tonight we'll be continuing to part 2. For those of you who did not join us last week, part 1 is available on the Shalom Task Force website for playback, and if you did join us, it's there as well if you need a refresher. Last week we touched upon quite a few things. We discussed different types of support available during the pendency of divorce. And then once a couple is divorced, we discussed the difference between child support, spousal support, and maintenance, including a discussion on add-on expenses. Remember, add-on expenses were tuition, medical, child care, tutoring, all those kinds of things. Then we discussed equitable distribution. What's equitable distribution? That's where we're dividing the assets, dividing accounts, residences, businesses. If there's a business in the marriage, that needs to be valued and divided. All of those assets, how we deal with that in a divorce, as well as debt. Debt is divided between the couple generally as well, and we discussed that. We went briefly into the difference between family court and Supreme Court, what can be accomplished in each, as well as the New York Get Law and how that affects finances in a divorce. Towards the end of our session last time, we got into the point, if you would, of our webinar, Financial Abuse 101, and we began to define what financial abuse is and tie together all the building blocks and financial aspects that affect our divorce. So let's jump right into it this week. We actually have a very ambitious outline tonight with a lot of material that is important to cover, and it's very practical tonight. Last week we were educating, we were giving a lot of information, things that you certainly need to know. Tonight is going to be filled with a lot of pointers and practical information, a lot of takeaways. So Erin, let's discuss financial abuse. Let's define that once again for our listeners and jump right into it.
Just before I begin, thank you, Rachel. If you have any questions tonight, it was the same as last week, and for those who weren't listening, I believe that Rachel, correct me if I'm wrong, there's a chat box that they can put their questions in to ask. And there's also, if you go on our website, shalomtaskforce.org, you go to the financial webinar section, they can put in questions through there.
Yes, and if you wish to remain anonymous, please make sure that you check off the anonymous box.
Thank you.
Okay. Some questions have already come in prior to tonight, and we've worked those topics into tonight's discussion. Anything else that comes up any other questions you may have, please reach out to us during the webinar and we will attempt to address it afterwards. And of course, Erin and the staff of Sarah's Voice is available for you to reach out to, and that contact information will come up at the end of the evening. Okay, Erin, let's do it. Financial abuse, please define.
All right. So the simplest way to define financial abuse is control through the financials. And we touched upon this last week. Essentially, it's not, it's more of a feeling that you get. It's not something it's not a one size fit all. But, the questions that we have on these slides are, they're representative of, if you answer yes to these questions, there's an indication that there is financial abuse present in the relationship. But I want to speak more about, what is financial abuse and how to differentiate it between a party who is responsible for financials and a party who is controlling the financials. So in a lot of relationships, there's very often a split in terms of what each person's role is going to be in the relationship. You have one party who might be, let's say, more involved with the children, and more party who might be more involved with the financials. That's not financial abuse if one party just happens to be either through an arrangement or naturally falls into that dynamic. One person is handling the financials more than the other.
And it works for you. And it works
exactly.
For you. Both parties agree, whether explicitly or implicitly, that this is something that works for their family.
Right. And it's very common to divide, family responsibilities in a relationship. So this is not to say that if you're not involved with financials, it means that you're being abused. But what we're trying to say is when one party is being prevented by being involved with the financials, or for example, they are, every single expense that they're using is being questioned. So this isn't a situation where you're being asked to stay on a budget. It's a situation where you don't have money to get what you need. So like what I see in a lot of my cases is that you have a situation where one party, let's say, is responsible for the child rearing and they have to buy the groceries, they have to buy the clothing, but they're not giving money to actually do any of that. And they have to ask their partner for permission, essentially, to make purchases. That could be a form of financial abuse, not having the money or not having the permission to do what is necessary for the household. The ultimate goal of the financial abuse is to always have to go to the abuser to do anything financial and to be kept in the dark about the financials. It's really about the lack of access to the resources and the lack of access to the information where you get a situation that involves financial abuse. Here are just some more examples of that. You know, one I already touched upon, having to beg for money, not knowing what's under your name, and taking money from you. So let's say you have a job and they're demanding that you give them all the wages. And this isn't a situation where you have an agreement. I'm going to deposit my salary into a joint bank account. It's being forced to do something that you don't want to do in terms of the financials for this without a legitimate reason. Like having a budget when you have a limited amount of income and being told, you know, this is the budget that we need to follow to stay within our means, that's one thing. But when there's no lack of reason for why these things are being done other than this pleases the other spouse, those are red flags that there's financial abuse in the situation.
I'm happy that you made that distinction there because I was going to ask you about that, Erin. It's important, you know, it's okay to be on a budget. It's okay to have a budget. It's, you know, it's okay for one spouse to even ask the other to, you know, curtail some spending sometimes. You know, obviously there's a way to have that discussion in a respectful way where everyone's on the same page and there isn't fear and power and control. Financial abuse has to have those underlying factors to make it an abusive practice, just like other areas of abuse. So when we're talking about financial abuse, we're talking about one party using power and control over the other through financial means.
Yes, and this is a very common form of abuse. It's really widespread, but because it's so hard to define and to distinguish, is something that the courts really have trouble conceptualizing.
Right. And I think not just the courts, but, you know, laymen as well. You know, I get people will question me, you know, all the time and ask me about it and say, well, you know what if, you know, my wife or husband really does not have the head for it, right? That's what people, they just don't have the head for it. And they would just spend and spend and spend if I didn't, you know, rein them in a little bit sometimes. But, you know, it's all about the power and control and what the point is of it, right?
Yes.
Why are they asking them to curtail their, you know, to really rein in the spending? How are they doing that? What's the point of it? Are they being limited to the degree where they cannot get basics, as you were discussing before, you know, food, clothing, and those kinds of things? So it really is a very fine line there. Okay. I apologize. I cut you off in the middle of all these great examples that you were going through on that slide, Erin.
I could share the slide again, but I think your points really touched upon it. This is really about exerting control and really making it so that, you know, you're really reliant on your abuser for anything financial, whether or not it's information or access to the money. And sometimes it goes the other way, is that the other party is maybe the one spending a lot and taking out debt under your name without your knowledge. So that was another example of putting debt under your name. And that's a really big one.
Another really good example, which you have on that slide, but
I'll share it.
I'm going to kind of clump it together, if you would. And that financial abuse can happen and often happens in a relationship where both parties are working. It's not necessarily one party having a job and the other not. Where you'll see abusive tactics are where one party is not allowing the other to have access to the money they themselves made. So if wife has a job and she's bringing in money, husband may not let her have access to the money that she herself earned. So it's not always, you know, a relationship where, you know, you have one party working and one party not. So one party is really, you know, controlling the finances entirely without contribution from the other. Very often, both parties are contributing theoretically to the relationship, yet only one party is controlling those finances. Does that make sense?
That's a really good point. Yes. And to emphasize, this is not a one size fit all. Like some of these examples might resonate. Some of the questions on the previous slide might resonate. Some of them might not. But what you're really looking for is it contextual based on your relationship? Is what is happening is, do you feel like you have a say or control, should you want it, in the financial decisions or understanding of the financial information in your relationship?
Right. And when you don't have that say in the relationship, and there's that control over the finances where the victim may not be aware of their finances, may not be aware what their accounts look like, may not have any access at all to the documentation or to the assets, it really presents a challenge when going to court. Because as we discussed last week, during the divorce process, there's discovery of documents, of financial information. We touched upon a statement of net worth and other financial discovery. But if you don't know what it is that you have or what it is that you're spending, what assets the family has, how to access that documentation, you're going to have a very hard time coming to court and fulfilling your obligations. Okay, because you have to submit certain documents and certain forms to the court, and a victim may not know the answers to those questions and may not have that information at their fingertips and may not even be able to access it because perhaps they're not on accounts or they don't know passwords or things like that. And that's very challenging when you're going to court, because then there are going to be a lot of answers like, I don't know, I don't have it, I don't have access to it. And that doesn't look very good from the court's perspective, unfortunately. Okay. So even though, we're talking about a victim of domestic abuse here, that person is going to appear evasive to the judge and to the court because they just simply don't know. But, there's a fine line there. And I think we encounter that often. I know you certainly do at Sarah's Voice. I think you're going to go through now some common practices that you encounter that present these kinds of challenges.
Yeah, and all of these practices are coming out of the control and the power that we discussed. Essentially, what you have is you have one party entering the courtroom with the information, the other party does not, or they were put in a situation where they had to get themselves into something that they wouldn't have consented to otherwise.
Right.
So what you have is these two parties going to court already with a power imbalance. You have one party, as Rachel says, who might have to say, I don't know to some questions. And then the court thinks, why don't you know? Why weren't you involved with why didn't you understand the financials? And the more you say, I don't know, even if it's true, the court can't necessarily, especially at the beginning of a case, tell who's telling the truth and not, and it looks evasive.
And you're really on uneven ground.
100%.
So tell us about some of the common practices.
Okay. So these quotes, clean hands, you made your bed, now you lie in it. These are often, especially the clean hands quote is something I hear a lot when I'm in court from all the judges, because like I said, financial abuse is this very vague concept and it takes some time to really have those dynamics play out in court. So these are some of the most common examples that I can think of. The number one, underreporting on your tax returns, the income. I mean, this is pretty much, it exists on every one of my cases, unless for the rare case where all the income is on the books. This is what I encounter, and what everyone really encounters is that the income, they say I'm making $50,000. My client tells me they were really making $150,000. And the judge says, well, you signed it. Now you're going to come to me after saying I'm not paying my taxes to the government, that I want this person to pay more in support. So that's a sticky issue that we run into. Another one is expenses and income not adding up. And this can happen with our own clients, where they're just not 100% sure of what things cost or what income was actually in a relationship. So as we discussed in our last series, when you go into court, you need to fill out something called a statement of net worth or financial disclosure affidavit, depending on which court you're in. You list out your income, you list out your expenses. A lot of times the expenses are higher than the income. And if there is no debt, these numbers don't make sense. And then the court starts to suspect that the person who's submitting that document is making more income than what they're reporting. It might be that the numbers don't make sense because the person submitting the document doesn't really know what the numbers are supposed to be. I have a lot of clients tell me, I never was involved with the financials before. I'm not great with numbers, so it's really hard for me to estimate how much, let's say, clothes cost every month, or I don't really know how we were affording our monthly expenses because I really don't know what they cost, or I don't know what the income is. So this is another tricky thing that we have to work with. And unfortunately, you have to fill this document out at the beginning of the case. So it's coming at a time of great stress, and you're trying to gather a lot of information quickly, and you just might not have the answers to everything. A third one that I really see very commonly is underreporting of income to qualify for government benefits or misusing those benefits. So for example, the family wants to apply for food stamps, or the abuser wants to apply for food stamps, or they want to go on Medicaid. So they tell their partner, fill out this documentation, put down my underreported income, and then we're going to qualify. So that can lead into issues because later on, the abuser is going to come into court saying, Judge, she's making up all this stuff, saying that I have all this underreported income, but how did I have all this income when we were on food stamps the entire relationship, or we were on Medicaid the entire relationship? And look, this person actually filled out the application and took care of all of it. Or it could just be about, like I said, misusing the benefits, trying to qualify for a benefit, and then having it paid in a way. Section 8 is a really big one. You get a Section 8 apartment, but you're not using the Section 8 the way you're supposed to. A lot of times we see the Section 8 where the landlord is a family member. The Section 8 is actually being paid to the family member. It gets very complicated. Placing assets and debts under other people's names, another big one.
Big one.
This goes both ways. So we sometimes, the most common form one is where the abuser is putting all the assets under a relative's name, a friend's name, a quote unquote business partner. We get a lot of that, but sometimes it goes the other way where they actually put, like, for example, a business. So, part of equitable distribution is that the court needs to divide a business. And to do that, you need to prove that the business exists. And then you need to have the business valued. And then the business is going to be given a value that's going to be split between the parties. It's a valuable asset. And it's also important to show the existence of a business to show income. So they might not only put it under someone else's name, sometimes they even put it under their partner's name, because there could be all these tax reasons for doing that. There can be, they have bad credit, I'm going to do it, or they're taking out a lot of debt against the business. So they're putting it against their spouse's name and then claim they had nothing to do with the business. It's really the spouse who's owning all this money. And then if there's debt associated with the business, they say, I'm the victim here. I had nothing to do with it. So it's, in a way, it's setting the spouse up in this odd change of dynamics. Rather than keeping things hidden from the spouse, they're actually giving the spouse a lot of control, but doing it for this nefarious reason, and kind of setting them up in court. And it's something very similar with debt. We advise all of our clients before they start a case to do a credit check, which is obtaining a document you can get one for free, and I'll talk more about it later, which says all of the debts that are under your name that are, they're not personal debts. There's a record of it. And sometimes we advise this because we do find cases where the abuser took out debt, especially credit card debt, under their partner's name without them knowing about it. And then all of a sudden they're saddled with all this debt that they had nothing to do with. And a fifth one that I see, less common than the others, but certainly very common, is when one party has a connection with the school, and instead of they're working for the school, instead of getting paid directly by the school, they just have the school give a credit for tuition. So they're applying, let's say you're making $20,000 a year working for a yeshiva. They say, okay, don't pay me that money, just give a $20,000 credit for my children's tuition. The issue with this is that is still considered income for tax purposes. And when you don't report that on your tax return, you're not reporting the full amount. And this is a tricky one because a lot of people do not know this. And then we get to court and the judge is saying, well, why wasn't this reported on the tax return? I mean, a lot of us don't have any experience with tax law or accountants. They don't know that this is something that you were supposed to be doing, and becomes an issue later on in court.
Right. All very important points here that can make somebody look unfavorable to the court. And many of them are really out of a party's hands, out of their control, either because they were unaware of it or because they were made to do it through various tactics. So now we know, issues that come up and challenges. How do we tackle those issues? And even better, if we're not in there yet, how do we avoid them? So how do we tackle the issues? Let's start there.
So it's a loaded question. So I say inform and disentangle. And what does that mean? So some of these things I'm going to go over, they sound like common sense. And you might say, Erin, why are you telling me this? I know it sounds like common sense, but when you're in a situation, you forget and you're so overwhelmed. So this is really just to check in and get back to the basics, because it really does make a difference. And the first is really basic. Read the documents before you sign them. If they're not correct, like on a tax return or a benefits application, then don't put your signature to it, which I know easier said than done. But at least if you read it, you know what they say. You might remember it later on if there's a question. And especially with the benefits, this might be a little easier than the tax return situation. I find that if someone says, I'm not applying for these benefits, I mean, the abuser can then go and apply for the benefits without you. It's not like a tax return where you're giving up certain kinds of, if you don't put your signature for it, then maybe they won't be able to file with you and they'll get stuck and they feel like they're giving up certain kinds of tax benefits. With public benefits, if you say no, the abuser can do the application themselves. So it's one of those things saying, if this is something you want to do, go apply for it yourself. And in many of my cases, it is the abuser that does the application, not the client. And that is already such a shield, because if they say, well, I had all these food stamps and I had this Medicaid, I have public assistance, at least the client can say, Judge, I had nothing to do with that. In fact, when it came up, I didn't want anything to do with it. And the tax returns, I know, is a trickier issue. A lot of clients tell me if I don't sign the returns, there's going to be consequences. We'll talk more about how to deal with that later. But at the very least, if you have control, there's no law saying that two parties have to file joint returns during their marriage. You're actually allowed to file married but separate. So if you don't like something, to the extent that it's possible, don't put your name on it.
Right. Okay, but what if it was already done?
So if it was already done, okay, so that is something that is really tricky. So it's already done. You're not going to spend your time crying over spilt milk. It happens. The next is really strategize with your lawyer about it. The first is to inform your lawyer about what happened and contextualize it for your lawyer. What happened in the situation that led to you to sign it? Very commonly, there were threats that were being made. I knew that I couldn't even say no because this was the dynamic. So it's really about allowing your lawyer to know what was going on in that relationship that led you to sign these documents. And there is something called innocent spouse relief for situations where someone really has no control over the financials, and this is something that was really going on with the abuser. It's a trickier case when you're living with the party and you're claiming it, but it's something that's really dependent on the fact-specific domestic abuse situations. Another tactic that I would advise is in the documentation section. If possible, document as much as possible financial conversations that you have with your partner or ex-partner during and after the relationship. So something saying,
but that goes, just to go back to the point about the tax returns a moment ago, if there's, let's say, a text conversation between you and your spouse about these tax returns from the time when you were discussing them or it was coming up, where you're objecting to something or have a concern in there, that's an important piece of evidence that your lawyer should know about that may help you. Like Erin said, you have to give it context. So you may have done it. Okay. You've done it. It's out there, but maybe it can be explained in a way that will help you or soften the blow a little bit or not make it as bad, and give it some context to then help you.
Absolutely. And that's why I'm putting as the documentation, email, text message, WhatsApp, even phone conversations, if you can record them, try to, get as much evidence or kind of create your own records so that the context for what was surrounding this, or even some of your objections or your concerns, to the extent that you can have that conversation safely, is documented. So later on, you're essentially getting evidence that you can later on use in court. We're going to talk about depositions in a minute, but
Erin, I want to give a caveat. You said,
yeah.
You mentioned recording a conversation, recording a phone call or conversation. In New York, that's okay because we are in a
Thank you.
state where
Yes.
one party to conversation may legally record the conversation, but that is not the case in every jurisdiction. And of course, the caveat across this entire webinar is that we are talking about New York law. Okay, we are talking, when we're discussing the law or how courts may deal with certain issues, we are discussing New York law. So in New York, it is okay for one party to the conversation to record the conversation without the permission or knowledge of the other.
Right. So to be clear, you are a party to the conversation. You're not secretly picking up the phone when your partner is talking to the accountant and recording it and they don't know that you're doing that. That is not allowed. But if you're a part of a conversation, you're allowed to record it. And this, like, again, this type of evidence could be something saying, you know, I'm not really involved. I don't really understand these numbers. Like, where are they coming from? I thought we had more money than this. You know, things like that can just already be something that will help the record later on. And we'll talk about depositions and why this information is helpful later. Other things to document, expenses. So again, we talked about not understanding what things cost and how, you know, how much was food per month. So if you're the one purchasing things in the household, keep receipts of what you're purchasing. You know, in a very rare case when you can't prove income, you're allowed to do something called a needs-based hearing, where the court can order support based on the needs of yourself and the children and not based on the income. So in those rare cases, receipts are the centerpiece of a case. But it's just a really good practice in general to, if you want to understand how much things cost, or if you want to show that the household lifestyle was higher than what the person is claiming now, you have the receipts to prove it. So this is really crucial evidence. Very rare when I actually get it, but very helpful if it exists.
Cases where there are higher net worths, often a forensic might be hired. If things are not matching up, a forensic might be hired to do a lifestyle analysis to show how much money this family has spent and what's been going into the accounts and what's been coming out, and how the likely income is probably X, and that's not what's been reported or what's being purported. So it's really, you know, it's important to keep track of what it is you are spending or what the expenses are for the family. Now, you mentioned keep receipts. You know, very often you and I both know that when we're discussing a case where there's financial abuse, the victim has to give in receipts all the time.
Right.
Has to account for all the money spent. So if that's the case, you know, make a copy of it if you can, take a picture, jot it down in a log. So, you know, we understand that you may not be able to actually keep the receipt, but you can put together your own documents to keep track of those things. You know, just a little story. Years ago, I was in a pizza store and I was waiting online for to order, and right in front of me there was a mother-daughter, adult daughter with her mother. I'd say that the woman is probably close to 30, you know, in her 20s, together with her mother, and they come up to the front and they order pizza. I think really just like 2 slices of pizza, and the younger woman pays for the pizza in cash. So, you know, at the time, this was a few years ago already, so really she gave her like, I don't know, $5, $6 for 2 slices of pizza, and it was cash, and she asked for a receipt. And her mom looks at her, and I'm a fly on the wall listening to this, and her mom looked at her and said, "You need a receipt for $5 for the pizza?" And she said, "Yeah, I really do." And she looked a little uncomfortable. So that's, you know,
and it shows it's in the community. It's around you.
It's in the community, it's around you, and that's a really clear example of a case that is something out of the norm. You know, if she were charging $5 on a credit card, it's fine. You know, a lot of people hold on to the receipts and they, you know, put it in their baggie, and at the end of the month, they reconcile, you know, their credit card statements. But it's unusual to find a need for a $5 receipt for 2 slices of pizza. And the look of discomfort on that woman kind of, I guess because I'm attuned to it, you know, and I've, you know, come across it and been educated in that way, red flags really went off.
100%. And it's a really good point because, you know, having those receipts later on, or even having the memory of it, you know, the court might find it really interesting. Why is this person having so many $5 receipts for pizza? It would lean credence to the fact that they had to request it every time. No matter how small the expense was, they needed to account for it.
Right.
But it also goes to the next point of maintaining your own records. So maintain a log of cash. So a lot of times a person might not have access to bank accounts, but the partner is giving them cash every week. And they're saying, this is your allowance, this is your budget. Do with it what you will. So maybe it's very small or whatever it is, just keep a log. Sometimes it's actually quite substantial if you're trying to show, okay, they didn't want to, everything was off the books, everything was in cash. Here's the cash I don't have records of everything because even though we had a really nice lifestyle, everything was in cash. If you're creating your own log, that's evidence later on. And the other types of documentation that's important are the standard tax returns, bank account, credit card statements, really anything in the house that has numbers on it can be quite valuable later on in a case.
Absolutely. And again, take pictures of it, get a copy, see whatever you can get and stash it away, put it in a safe place, email it to a friend, compile that file for when you need it.
Yeah. Just take the picture, send it to a friend if you need to, and then don't think about it until hopefully you won't ever need it. But if you do, it's there. And just very briefly, so this is really just to explain what the lawyers are doing to try to help in these financial abuse cases. These are our tools to try to find out information, discovery demands, asking questions and demanding documents from the other side, subpoenaing documents, asking the depositions I refer to, asking questions of the other side. And part of those deposition questions that I normally ask is the process for filing a tax return. Who was involved and who wasn't involved? What point in the process was the survivor even given the tax return? Did they meet with the accountant? So these are all questions, but for all these discovery tools, the lawyer needs to know where to look and what to ask. And if they're not provided with that information, it's going to be very difficult for the lawyer to know where to go next and what to target.
Absolutely. I can't tell you how often I'll say to my clients, you have to help me help you. Okay. I don't know what your situation was like. I don't know what you had. You have to give me some information so that I know the questions to ask, even from my own clients, to elicit what I need to be able to help them.
Yeah. And then one last tool that we're going to discuss is consultation. Again, a pretty basic one, but not one that everyone thinks about. So Rachel and I, we're family law attorneys. We know family law. We don't know the tax law. We don't know accounting. We don't know real estate. So in all of these areas, we always say to our clients, I can't answer that question. I can't tell you, for example, when you separate, who gets to claim the children? Mm-hmm. This is one that I have some basic understanding with for a very basic case, but sometimes things get a little tricky and you're not really sure, or there's more complicated tax questions out there. This is why you want to have a tax attorney, have an accountant, reach out to a domestic violence organization, because we can very frequently put you in touch with with a tax attorney for free, or other areas. For example, consumer protection. If there's a lot of debt under your name and you're just so overwhelmed, you don't know what to do with it. Maybe you're thinking, can I get rid of this debt? Can I file for bankruptcy? What are your options? There are projects out there.
How might support affect any benefits you're getting?
Yeah, and then you want to be speaking with a benefits attorney. So there's a lot of overlap with family law. So reach out, get help, and a lot of times domestic violence organizations will put you in touch or suggest which professionals you need to speak with to get the information that you need.
Absolutely. And where a real estate professional comes into play and is important is if there's a marital residence. If there's a house that belongs to the marriage that will then have to be sold or transferred, those will be questions that you'll have to discuss with a real estate lawyer to make sure that your goals are in line and doable with the law, both the matrimonial law and the real estate law. Okay, so it's having all these people on your team, so to speak. You have your matrimonial attorney, and then you're going to consult with tax professionals, real estate attorneys, domestic violence agencies and organizations. All these people are going to support you to reach your goals. And that's an empowering position to be in. And while it may seem overwhelming to somebody who's going through the process, because there is a lot going on, it's also empowering to know that you have all this information at your fingertips and people that can guide you. So that brings us to the question of, how do we reach or continue this empowerment and try and reach financial independence and literacy and gain as much education as we can? What is financial literacy?
So financial literacy, I think, is the key to, combating financial abuse and helping your attorney. It's the knowledge and the skills to make sound financial decisions and obtain resources. So what does this mean in practical terms? And the second half of this webinar is really going to focus on, okay, now we talked about documents. Now we talked about consultations, but like, where do you really start in a practical sense with all of this information? How do you move forward? And, you know, it gets so overwhelming with these financial cases. Like a lot of times, like I said, I have clients who say, I don't know numbers. I don't want to think about numbers. I remember I did an internship one time in the bankruptcy field, and it was very similar. You get a lot of bills in the mail. You don't even want to open it because it's so anxiety inducing. But financial literacy, it's about really understanding the financial, you know, environment that you're in. And that knowledge reduces the anxiety so you can make decisions. And it really kind of clears all that confusion that might be going on in your head so that you can move forward. So let's talk about some of that. Bear with me because there's a lot to go through. But before we get into it, I really want to make a brief mention about safety. A lot of what I'm going to be talking about, it's not a one size fit all. It's very fact specific. Are you still living with your abuser? What's the abuse like? Is this person who's going through your phone every 10 minutes? So, you know, again, what I'm talking about, all of this is important, but your safety is always the most crucial element that you should be focusing on. If you're not sure about how to financially protect yourself because of the safety concerns, when it's okay to do so, contact a victim advocate, such as what we have at my organization, and they can discuss with you safety planning and tools that might be able to help you get that financial literacy, but doing so in a safe way. So if anything that I talk about doesn't make sense in your situation, acknowledge that, and that's okay.
Erin, I also just want to point out that sometimes when you're accessing certain financial information, the account holder may get an alert.
Exactly.
They get some kind of alert of your access to it, and that may or may not be dangerous for you. So please be aware of that and consider that.
Exactly. And that's why you want to, if you're concerned about that, speak with a victim advocate first. We do get cases where we work with survivors about, you know, let's see if we're able to call the bank together and find out, can you do something with this account without the other side getting an alert? Because sometimes you can, sometimes you can't. For example, and there are other tools, and okay, you might have to like cross that one off. Okay, the abuser is going to be able to get an alert. What else can I do to try to get this information that's in a safe way? So it's really about brainstorming and keeping safe. Here's just a very brief rundown of some ways that you can get financial literacy. We've talked about it a lot. Familiar size with expenses versus income, really important, gathering records. But the free credit check I want to discuss a little bit more. The free credit check. So what is a credit check? It's when you're able to access your credit report. And a credit report is, you know, depending on how long you've had credit, it essentially says all accounts that you've opened and whether or not you're current on those accounts, or if you're delinquent, if you owe money on those accounts. So the credit score, or the credit report will list out all the debts that were under your name and what you owe and whether or not you're delinquent. So for example, your mortgage will be on a credit report, and it'll say if you're making monthly payments, or if you're owing monthly payments, or if account was closed because of non-payment. So you'll be able to see all of this, your bank accounts, your you know, auto loans, your mortgages, it's all your student loans, it's all going to be under one document. You're able to get a free credit report each year from one of the three created agencies. They're called Experian, TransUnion, and Equifax. So in essence, you're allowed to actually get 3 credit reports a year. And it's very easy. You go to this website called annualcreditreport.com. You have to answer some questions. Later on, we're going to have a slide with the resource to that website. And there are other ways to do it. If you can't do it online, you can do it through mail, but then there's some safety considerations as to where they're going to be mailing this report. So in most cases, it's a relatively straightforward process, and it's really one of the keys to starting a case. I require all of my clients to get a credit report before we go into a divorce case.
And it could be really eye-opening as well, not just to shed light on things that assets or accounts you may have known about, but all too often we have people running credit checks and finding out about credit cards or accounts, even properties that were put in their names that they had no idea about.
Yeah. Or the reverse, you open this account and you see everything looks hunky-dory, which means very likely your credit score might be really good. And that means you can take credit out under your name. If you want to get an apartment, lease a car, take out a mortgage, refinance your mortgage. If you have good credit, you have a lot of options available to you. And if you have bad credit, you can start rebuilding the credit. So it's just so important to have that information because it opens opportunities and allows for planning.
Absolutely.
So we talked about financial gathering documents. So how do you know which documents to gather? I mean, you want to get stuff on income, you want to get things on expenses, your property, real estate. You want to just have a basic understanding of what all of these words means. For example, equity. Like Rachel, do you want to explain what equity is?
Well, the amount equity is the amount of money that you have in an investment or in a property that doesn't have to be paid back to anyone. I think that's the most simple way to
Yeah.
explain it. So if a property is worth $100,000, but you have a mortgage for $50,000 outstanding, the first then $50,000 would go to the bank and whatever. Let's forget about any kinds of fees and all that stuff. But say $50,000 goes to the bank. The equity remaining in the property would be $50,000.
Exactly. And this is important because a lot of times clients say, well, I own this house and I think it's $1 million on the market. But if you have a mortgage of 800,000 on that house, you don't have as much money as you think. So just becoming aware of what you owe and what you have.
Right. And we addressed last time what's a little bit about separate property credits, that, you know, there may be some credits that come out of that as well. So you may have to pay off a mortgage, and you may also have to pay off a HELOC. And then there may be a separate property credit. Maybe somebody put money into down payment that was premarital. So after you take all of those things out, what's left would be your equity. And that's what would be distributed.
And the real point of a financial inventory is understanding, you know, essentially what is coming into your relationship and what is going out. You want to understand the cash flow, you know, so to speak, of what your financial picture looks like. And knowing what's financially happening in the home, you know, again, some people might be able to access these records. There might be bank accounts under your name. Other people might just not be able to access those records. But then what we would say is just try as much as to pay attention to financial conversations, whatever's slipping from your partner's mouth or what they're saying to other people. Just be observant of what they're saying and what documentation they're handling, where they're keeping the documentation. Do you have access to it? Can you get access yourself to documentation? So Acris is a website that you can go to that we're going to include as a resource later, where you can actually go up and look up your property, see whose name the house is under, see whose name the mortgage is under. You could even get a, you know, relative tax assessment of what the house is worth on Acris. I mean, it would need to be appraised later on, but it would give you a sense. Understand what accounts are under your name and what accounts are not under your name. And if they're under your name, are you able to get this information yourself? So credit cards is another tricky one. What credit cards are under your name? Are you the account holder or are you the authorized user? Authorized user means that you're not actually responsible for the account. You have access to the card, you're allowed to spend on it. But if a payment is owed, it's not your responsibility, it's the account holder's responsibility. And the account holder can take your name off that credit card whenever they want and add you whenever they want. And it works in reverse. If you're the account holder and your spouse is the authorized user and your spouse is running up a lot of debt, and you've had this conversation before about how the money is just not there and they don't care because it's your credit, you have the right to take that person off your card. So understanding the difference between authorized user and account holder. An authorized user might not be able to access the credit card records, but an account holder can.
Absolutely. And I also want to remind our listeners, and this is something that we discussed last week as well, that when we are speaking about money that's coming in, again, it's money from all sources. So it's not just income, it's not just business relationships or investments, but it could be gifts and loans from family as well. And that's really very important to remember and to document also. You know, if there are checks coming in or even cash from family that goes to help support the family, and that money is relied on and used on a regular basis, please document it. Take pictures of it. Put it in your log, because that's all going to become relevant when we're talking about imputed income as well as distribution of the assets.
So, and it'll also help make sense of things. The income is only $20,000 a year, but you're getting $50,000 a year from family help or from gifts. That's all going to help explain. So when we talk about an inventory, it does not just mean wages. It means everything that's going in and what's going out and what's under your name, what's joint, what's individual. Just, you know, start by the basics, make a list. And then when you have that list, we'll talk next about how to get documentation. But once you have that documentation, you need to learn how to read it. So I know that this sounds, again, we're talking about basics, but I know when I started my job, I did not know how to read a tax return. So it could be, you know, sometimes you just need to sit down with the instructions, which is what I do as part of my job. I sit down with the instructions and I learn how to read them. There's different schedules for each tax return, and they all mean different things. There's one schedule for business expenses. There's, regular wages, or even just learning the pay stub, that, pay stubs will not only list the income, but they'll also list what taxes are going out, but they can also indicate, what we have over here, a 401k. This means that this person has a retirement account. You might not have known that, but on the pay stub, if it says 401k or different kinds of words might indicate a pension or a different kind of retirement, this now means that this person has an asset that you were not previously aware of. It might mean health insurance that you were not previously aware of. So the pay stubs can be a wealth of information if you know what to look for and how to read them. The same thing with the tax returns. There might be information on there that you didn't fully recognize that could be indicated on that would say, okay, there's another source of income. There's a business in this relationship. Balancing the checkbook. This again just goes to the basics of, if you write down what your expenses are and that there's no debt in the relationship, this will help you understand what income is going in, because this income had to exist to cover the basic expenses that you have.
And this is something, again, that you can create yourself. When we say balance a checkbook, we're using that loosely and not as a term of art. It can be literally be balancing your checkbook, or it can be making a list of the money that is spent. So that way you can recreate that checkbook.
Yeah, it doesn't have to be what you see on the slide over here, something that you're literally put into your checkbook. It could be, as Rachel said, an Excel document, a Word document, a handwritten note. And this is all evidence when you're creating it during your relationship that can be useful later on in court. So now let's talk about gathering the records. Okay, I know I want these records. How do I gather them? So first of all, the IRS can provide the tax returns, but if you can't get them from the IRS because they're pretty slow, you can actually obtain tax transcripts, which is not as detailed as a tax return, but it still includes all of the juicy information that your attorney really needs. It'll show if there's any tax debt owed. It will show what the wages are. So it's usually a really great resource. That's a quick way to get information rather than waiting on the IRS. But usually they mail it to you. So again, this is something that you want to flag if there's some safety considerations. See if you can get bank account statements from the banks, again, without alerting the abuser. So if they're putting it in the mail, if they're faxing it, make sure that they're all going to a safe place.
Remember, a lot of that is available online also. You may be limited by how far back you can go, but you can get a pretty good picture, definitely, generally a couple of years online.
Yeah, start an online account.
But you need passwords, and that's not always available to people. But that's a resource if you can reach it.
And starting the online account, making sure that if you start this account, the abuser won't get alert. So again, we're talking about calling the banks and asking this question. And then sometimes just explaining the situation, being like, look, here's what's going on. How can I start my account online without them being alerted? Is it even possible? So again, a lot of this over here, this is talking about independence. But before we get into independence, Rachel, is there anything that you want to add about what we discussed?
I don't think so. I think we covered it all. I think the big takeaway is that people have the power to take, control of their finances once they're more aware of what different resources are. And I know towards the end, we're going to put up a page with lots of links to things that we've already discussed, but we've given so many good pointers and takeaways already regarding checking your credit score, looking at any real estate holdings, recreating documents, balancing your checkbook, and creating that if you needed to. Again, the requesting tax returns. So these are all ways that you can gather information, even if you never had it before, to try and get a better handle on what your finances are and how to move forward in a way where you're better educated and hopefully more in control.
Yeah, and I know that I went through everything really quickly, but again, it's really just about reminding yourself, what do I need? What questions do I have? And how do I get this information? So even if you aren't able to do it while in the relationship, you already have a game plan. If you're thinking about separation, this is what I can implement when I separate and when I speak with a lawyer. And then you can even just again, but like Rachel said earlier about, help me to help you. The more information you can give your lawyer, the more helpful we'll be. And even if that information is, I suspect there's something going on here, this could be a place to look, I wasn't able to get the information, do you know how to? Or who should I speak with to get this information?
Absolutely. It's really very helpful. And then we need to really talk about and turn to how we can then continue that financial literacy and how we can turn that into independence, during the pendency of divorce and afterwards. And what can we even do beforehand, before your spouse or partner even knows that you're contemplating divorce? Are there any steps that we can put into place to foster that independence and really help somebody on their path?
Right. And again, the whole point of this, the goal is to make you feel that things might not be the way that they were before the relationship broke down. Because as Rachel says, you're going from a 2-income household to a 1-income household. But the point is that how can you feel somewhat independent of this person so you can make it without that relationship? So there's various, so let's talk about financial independence. So the whole point of financial empowerment is to reach the goal of financial independence. Opening the online account, so going from a joint account to an online account. You can do this at any point in your relationship. What we talked about in the first webinar was that you're allowed to do this. It might be marital property, but you're still allowed to do that. And the real key about it is that you control that account. You can put money into that account. Sometimes I hear stories saying, I gave 75% of my paycheck to my partner, but I kept 25% for me. And I was slowly building up my money and my savings over time. They didn't know about this account, but I had it so that when I separated, I wouldn't be left with zero. Opening up your own credit card, that if they cut you off suddenly, you'll have a line of credit that you can use for, again, especially an emergency. If you need to buy something and you don't have the money, now you have a credit card that they might not know about that you can use for those resources. Try to find low cost or free training services, ESL classes if you have limited language abilities. Further your education, if you're in the position, go back to school. Go back to, even if it's a matter of starting with getting a college degree, a post-bac. I had a client that went to CUNY, Touro, all of these colleges, they have financial scholarships, they're low cost, just by getting a degree in something can really be the pathway that now that you're able to earn a substantial income, that's really a gateway to leaving a relationship, which is why a lot of times abusers don't like it when you further in education. They don't like it when you work because they know once you have financial independence, it might lead to the breakdown of the relationship. But you'd be surprised. A lot of times if you frame it in the right way, this is good for the family, it's good for the kids, it's good for our earning potential, you might be able to come to an agreement on going back to school. Or if you're in the situation where you don't need the consent, consider it. It's a really
important one, and something
yes.
I often urge people to consider.
Yeah, if possible. I know, there's a lot of cases with childcare. It might be something that sometimes people wait for until the kids are in school, not infants, but it is something that we've seen happen in our cases, and it really does make a difference. A question that I get a lot of times about it, but isn't it true that if I work, then I'm not going to get spousal support? And what I always say is if the income is off the books, spousal support is such an uphill battle in a lot of cases. Even if you get it, then you have issues with enforcement. It's always better. And a lot of times the income is more than what you'd be getting in spousal support. It's always better to rely on yourself rather than relying on this bad actor to pay you the money. Another thing that people don't know about is that during a relationship or even after a relationship, you don't have to file joint returns. And a lot of cases, depending on the time that you separate, the person who has the children, if they have the children for more than 6 months a year, is entitled to claim the children as dependents without the consent of the other party. So after you separate, if you separate before essentially June 30th, you have the right to claim the kids. And, again, check with the tax attorney, as we said before, but 9 cases out of 10, that's going to be the situation.
That's very important. And if there are lawyers on both sides as well, if you have a lawyer and your spouse, soon to be ex-spouse, has a lawyer as well, when it comes time to filing tax returns, it's often a discussion that the lawyers will have about whether you'll be filing together or separately, what would be most beneficial, and if there's any kind of indemnification that's necessary there as well.
There is definitely strategic decisions about it, but you have the right to do it should you need that income from the dependency, especially now with COVID, that money and the stimulus checks, there's been a lot of discussion about it, about abusers taking the stimulus checks, that they have the right to do that. There's a lot of tax issues going on. And it's what I find is that a lot of people have more rights than they realize. And they realize that once they speak with a lawyer.
And yes, so it's very important to speak to your lawyer and these other professionals that we had previously discussed, because when people make assumptions or they take matters into their own hands, they're often not getting as much as they could, or not exercising the rights that are available to them. So it's really important to bring up these issues with your attorney.
Yeah, and the whole point of financial empowerment and independence is what we've been talking about this whole time. Being able to move out, get your own apartment, get your own home, manage your debt. If you have a lot of debt under your name, creating a plan for paying off that debt, finding a way to really just be able to, again, it all comes back to balancing the checkbook. Find a way to meet your expenses with the income that you have.
Absolutely.
So a question that we might have is, what resources are available? So we put a lot of them on our website. And I'm going to ask
Jeffrey,
our
website?
Yeah, our person behind the screen, who's been such a tremendous help in putting this webinar together. I want to give him a shout out and ask him just to briefly share the resources on our website. So we made a list here to talk about just basic general resources that are out there that you can talk to, who can do a much better job than what I've been doing so far about financial empowerment resources, and to really discuss everything that we talked about together in more detail. The taxpayers, regards to domestic violence, as I mentioned very briefly, that depending on the situation, you might qualify for certain relief because you're a survivor of domestic violence. And this website is for more information about that. And if you scroll down, we also included information on how to get your tax transcripts and copies of your tax returns, ACRIS documentation, again, the real estate documentation, which is available for only people in New York City, unfortunately, but if you're from New York City, this is how you can get property records. You could even just see if it's not even under your name, you can search your ex-partners or your partner's name or their relative's name. See that you can search the property that's under their name, see where the money is going, where the property is going, if there's any transfers, and how to get your credit score. So we're going to begin to wrap up. Rachel, do you have any closing remarks?
So those resources are all available on our website, and in a moment we'll put up all the contact information for our website, as well as the phone numbers for the Shalom Task Force hotline, as well as our text line, which is open until midnight tonight. The Sarah's Voice, that is Erin's project. They have a phone number and text line as well, which are up there on the screen, as well as email. They are not open until midnight, but you can certainly send an email and somebody will be in touch, or you can reach out to them tomorrow during regular business hours. And our website is below, where you can access this webinar as well as part 1, and lots of other information that Erin just referenced. When we began in our introduction to part 1 last week, we began by asking, why do people stay in an abusive relationship? And what we discussed was very often people cite financial insecurity and concerns as one of the primary reasons why they stay. They just don't have anywhere to go, and they don't know how they're going to support themselves or their children, and that may keep them in an abusive relationship longer than they would like to be. So our goal in this 2-part series is to empower people, to offer information and guidance, and to help people take steps towards financial security and literacy, so that financials become less of a source of anxiety when making a decision to leave an abusive relationship. I hope that we've accomplished those goals. In the past 2 weeks, we've covered a lot of material. I urge you to please reach out to Sarah's Voice and to Shalom Task Force, so that we can offer any other assistance and help you in your path to financial independence and safety. Erin, anything else to add this evening?
I just want to thank everyone for joining us. I know discussing financials for 2 weeks is never fun, can be kind of boring.
I don't know. You did it. You did it really well, Erin.
I mean, I might be a bit of a nerd because I find this stuff very interesting. You know, if you have any questions, please reach out to my organization. I want to give a thank you to our victim advocate, Jamie, who put together these slides and who is our first point of contact when you reach our project. I have to note she is on vacation right now, so depending on when you watch this webinar, you know, today is like August 17th, 2020. She'll be out until September 2nd. You know, please leave a message and we will get back to you as soon as we can. Thank you so much.
Absolutely. Thank you very much, Erin, for your participation and your dedication always to Sarah's Voice. We appreciate that very much. And you have offered help and assistance, guidance to many. Okay, so thank you all for joining us this evening. Everyone stay safe and have a good night. Take care.